Imagine you are sitting at a dinner party with friends or a casual gathering with family. Someone mentions the high cost of living, and without thinking you say, "I am not too worried, my pension pays out $6,000 a month and I just cleared my mortgage." In that one single sentence, everything about your social dynamic has changed forever. You didn't just share a piece of good news, you inadvertently painted a target on your back and shifted how every person in that room perceives your value, your generosity, and your availability. After you cross the age of 55, money information becomes incredibly sensitive. This is the stage of life where people assume you have accumulated significant assets, whether it is home equity, retirement accounts, or a pending inheritance. When you disclose your financial details, you are no longer just a friend or a relative. You become a data point in someone else's financial planning. This video is not about being a secretive person or living in a state of paranoia. It is about protecting your peace, your relationships, and your long-term financial safety. We are going to cover 8 specific things you should never reveal about your money after 55. Pay close attention to number 6 because it is the one most people reveal completely by accident, and it can damage family relationships for decades. Before we continue, please take a moment to like this video, subscribe to the channel, comment below, and hit the notification bell to never miss our next wealth-building breakdown in this changing economy, and to help this video reach others in our community needing financial advice. Firstly, before we dive into the list, we need to set a very clear frame. Privacy is not the same thing as being dishonest. There is a massive difference between healthy transparency and unnecessary exposure. You should absolutely be honest and open with your spouse, your financial advisor, your attorney, and your accountant. These are your professionals. However, the problem arises with casual disclosure to neighbors, coworkers, distant relatives, or even adult children before the time is right. By keeping your financial business private, you are not being selfish. You are being responsible. You are ensuring that your retirement planning stays on track without outside interference or unearned expectations from others. The first thing you must never reveal is your exact net worth. When you tell someone the total value of everything you own, it creates immediate labels. People will categorize you as rich, struggling, lucky, or cheap. Even if your friends have no bad intentions, they will subconsciously start judging your spending habits. If you buy a new car, they'll think you're showing off. If you decline an expensive dinner, they'll call you a miser because they know exactly how much you have in the bank. Furthermore, things like home equity or retirement accounts can sound much larger to a listener than they actually feel to you. $1 million portfolio sounds like a fortune to a 30-year-old, but to a retiree, it represents a calculated budget that must last 30 years. Instead of giving numbers, use practical replacement phrases. If someone asks, just say, "We're comfortable, but we still have to be very careful." Or, "We planned ahead, but retirement still requires a lot of discipline." The danger here isn't just scams, it is the weight of expectation. Second, never share your monthly retirement income. Whether it comes from a pension, Social Security, rental properties, or dividends, your monthly cash flow is your business alone. Sharing this triggers comparison and pressure. If people know you have a steady, guaranteed check coming in every single month, they may assume you can always afford to pay for the group dinner, the family vacation, or the unexpected emergency. They don't see your taxes, your rising healthcare premiums, or the inflation eating away at your purchasing power. They only see the extra money. When the topic comes up, simply say, "We have a fixed retirement budget that we have to stick to." Or, "We have enough to manage, but we have to watch our expenses closely." This connects directly to the next mistake because once people know your income, they usually want to know where it is kept. Third, never reveal where most of your money is kept. Never casually disclose your banks, brokerage platforms, or physical document storage locations. Avoid mentioning, "I keep all my savings at the local credit union," or "Most of my money is in a basement safe." More particular information makes social engineering, scams, and manipulation simpler. Small leaks of information help financial scammers create confidence with older folks. Scammers are halfway through if they know your bank. Keep responses ambiguous and professional. Simply state, "Everything is organized and handled professionally by our institutions," and leave it. Fourth, and possibly most emotional, never indicate who gets what in your will. Anger over inheritance details grows. Telling your children or relatives who gets the house, jewelry, or business might create a toxic competition environment while you're alive. Discussing future money too early can stress even the most loving households. People mentally spend money before using it. Estate plans can alter. You may need that money for long-term care. The plan may change because of necessity, which may disappoint someone who promised it. Your executor needs the specifics, but the family doesn't need a breakdown. Just say, "The legal documents are all in place and the right people know where to find them when the time comes." Fifth, never say how much you'll support your kids or relatives. While generosity is great, promised money quickly becomes expected. You establish reliance by promising to pay for a grandchild's college tuition or a niece's housing down payment. If the market crashes or you have a medical emergency and cannot help, you become the bad guy who broke a promise. Shocking folks with help is best when you can afford it. To help relatives, explain, "We will help out where we can, but we have to make sure our own retirement is secure first." Overpromising can undermine the connections you are attempting to support. This sixth tip is for vulnerable people. Don't tell anyone your money worries. Everyone fears running out of money, growing medical bills, or market volatility. Sharing these anxieties with casual friends or distant relatives is wrong. People may gossip about your instability or use your fear to give you bad, unsolicited advice. Even worse, financial weakness can attract predators who want to help you with high-risk investments or frauds. Stressed? See a professional. Keep it brief. We're reviewing our plan and making adjustments as the economy shifts. People unwittingly vent this way, but the ramifications can be enduring. Seventh, never brag about significant investment wins. Taking credit for a stock's rise or a home sale's success fosters jealousy and unsafe copycat behavior. If you tell a friend you made a fortune on an investment, they may copy you without realizing the hazards. They'll blame you for financial losses. You look to have infinite finances when you announce large successes. Keep your wonderful year to yourself. When asked about your investments, answer, "We've had some good years and some difficult ones, but I try not to give advice because everyone's situation is different." This prevents you from being held responsible for others' financial decisions. Eighth, never announce large money maneuvers before completion. Don't disclose a home sale, substantial investment cash out, or international move until the ink is dry. Early announcements invite criticism and pressure. Everyone will have a reason not to, or how to do it better. Some relatives may try to get you to move nearby so they can provide free childcare. Explaining to everyone why a transaction failed or that you changed your mind is difficult. Say, "We're exploring some different options, but nothing is final yet," to hide your plans. You'll hear more when the time is right. Choosing the appropriate individuals is the actual lesson, not telling no one. Classify your friends into 3 groups. Your spouse, attorney, and financial advisor are Category 1. They should acquire every bit of info. Group 2 includes adult children or a trusted executor. They may know where documents are and your plan's structure. Category 3 comprises neighbors, casual friends, and distant relatives. They must know nothing about your balance sheet. People's biggest error is giving Category 3 information that only the people in Category 1 should have. Boundary scripts help handle these interactions. Try expressing, "I don't really discuss exact numbers," or "That's something I only discuss with my financial advisor." These are professional and firm statements. You model how you want to be treated. Also, avoid oversharing online. Showing off a new luxury car or a retirement win holiday plan can reach well beyond your target audience. While you may be having fun, a stranger or distant acquaintance may sense a chance to use you. After 55, revealing less unneeded info gives you more life control. Your net worth, monthly income, fund location, and will should be confidential. Don't overpromise family aid, limit financial worries to professionals. Don't talk about investment victories, and don't debut huge movements. Following these rules protects your relationships from money's corrosive influence and ensures a peaceful retirement. Which do you think individuals reveal most unknowingly? Comment below regarding the number of the most common mistakes you have made. If you like this, check our next video providing valuable financial advice. Thanks for viewing and keep safe.